Good morning, traders and investors. Welcome to Pre-Market Prep. Let's talk about what we got on the tape today. We got the battle between the White House and Strategic Petroleum Reserves versus OPEC. What's going to happen in crude now? Earnings. We got a couple of stocks out this morning. We'll talk also about some rating changes. Goldman Sachs hitting the tape today with two big ratings. Stay tuned for that. And of course, we'll talk about recession concerns, Ford increasing the F-150 Lightning pickup truck, Costco giving out some reports from their September sales, Peloton, we'll have to talk about Peloton. Joel, I don't know how you're going to feel about the news. And of course, we'll talk about the Twitter saga as that continues. We'll talk about all this and including what stocks are moving with our guest, Christian Fromhertz. He'll be joining us, the co-founder and CEO of Tribeca Trading Group. Let's get into the action today. Pre-market prep, rise and shine. It's time to start the day. Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day. All right, let's bring on the guys. Joel Elconin's back and Dennis Dick. How are we doing, guys?
How was the birthday? Joel, how was the birthday?
It's over with. It's over with now, right?
Happy birthday week.
How do you get like a birthday?
You get a birthday week.
Yeah, birthday week.
Birthday week.
It just happened to coincide with the Day of Atonement. So I've had enough people say, "Isn't it great? Everyone asks for forgiveness on your birthday." But it was a good birthday. I guess I had a birthday party. Lisa we had about 20 people over our house for breakfast. So, but I had a lot of food and good celebration, got some nice cards, got some nice gifts. So I don't feel a day over my age from yesterday. So I'm back and ready to go. I'm trying to figure out these markets with you guys. I'll do the rundown and then you guys can clue me in what's going on. S&Ps are down 18.75 handles, 37.75. Still having a good week. I don't know how many times we can say that on a Thursday. Dollars up 32 cents, 111.33. TLT flat, just hanging out near the low of the move. Crude down 32 cents, 87.44. Gold, silver, Bitcoin, and Ethereum are all up like modestly here this morning. Nothing sticking out to me on those. So what I missed yesterday?
Chop.
Well,
lots of
chop
continues.
The chop continues. Now, one thing you did miss yesterday is, of course, the battle that's going on in oil. We were talking about OPEC Plus. What was going to happen? Was it going to be a buy the rumor, sell the news? Well, it was buy the rumor and buy the news, because that's what actually happened here in the battle between the White House using Strategic Petroleum Reserves versus OPEC Plus. Now, OPEC Plus has made the decision here to go ahead and reduce production by 2 million barrels per day from November. Estimates on the cut were somewhere between 500,000 and 2 million barrels. They went on the high end here. And of course, Biden trying to fight back here. And, he was just in Iran trying to get them to do more cuts. Not production cuts, but actually increase the production, not cut the production. So it seems there's a big battle here. And what he did was he directed the Department of Energy to release another 10 million barrels from the Strategic Petroleum Reserve. So the questions now will come to us. Will prices rally back to 100 a barrel?
We've rallied already. We've had a really good rally in crude. And I still think people who are looking and just saying, yeah, crude's all-time highs. Maybe if we get out of, this whole recession scenario, but if you're calling for a recession, you're calling for crude to go higher, those two things don't go together. Crude will get hammered in a recession. So I think you're getting a relief rally. I think a lot of, crude stocks got sold off pretty dramatically. They've come back fantastically. You were an Exxon Mobil, I would sell it. The thing went from $85 to $100 in the last 6 days. There has been just a substantial rally in crude. I sold my Oxy because it's been a big move. I bought it poorly, but when you have a stock go from 56 to 67 in 6 days, those are big moves. So we've kind of had the rally in crude already. So I actually am, maybe I'm a broken record here, but in stocks that are ripping, I'm selling.
You know what? I thought about this a little bit, and I think there's one fundamental question. Like, we hear all this stuff with OPEC, right? And they're doing this and they're doing that, and the war in the Ukraine. The bottom line, and if you can argue with me and give me another point, I'm open to it. But moving forward, the world is going to be using less oil. They are. I mean, that's it. I don't know if solar is going to do what solar is supposed to do, and EVs or whatever, but you are in a long-term downtrend in the usage of oil. Okay, so OPEC and all these countries are going to do whatever they can to pop up and sell as much oil they can as highest prices as possible. But eventually, we're going to be using less oil. So if you have less usage, then boom, you're going to have more supply. And when I went to school, if you have more supply than demand, prices go down. So I'm just sticking with that. And I mean, I'm just so sick of every OPEC did this and oil's
that out before.
We don't need oil.
But
right? Eventually we're not going to need oil.
10 years from now, I think.
Is that 10 years from now? Is that 5 years from now, Joel?
It's not 5. It's more than 5. So we are moving to EVs. That's going to hit it. Obviously we're moving away from dirty fuels, but we are a long ways away from doing that. Away. So I think the trade is early. I think Kathy Wood, has been given that argument. I think she's going to be correct, but I think she's like 10 to 20 years early. So I'll take the opposite side to say, we still need oil for the foreseeable future.
I'm not saying we don't need it. I'm saying we're going to be less reliant on it.
And that is the move. We will continue to be less reliant on it over time. But, it's not my job to predict 10 years from now. It's my job to predict 10 minutes from now or 10 days from now. I just think we've had a hell of a rally in these oil stocks. People who are like, rah, getting bullish now. Where were you a week and a half ago? I know, Mitch, you've been bullish the whole time, so I'm not talking about you. But, I mean, this has, had a pretty good rally. I mean, the name of the game in 2022 has been selling the rip. I'm doing the same in oil. Chevron, take this one, Joel. Let's go to the technicals. 160 to 165. Geez. Major resistance here. We just came from 140. Are we just ripping right back to 180? I don't think so. Exxon Mobil, the $100 psychological level, is huge. We kissed that yesterday. We went up $10. We went up 12% Exxon Mobil in 3 days. What do you want as an oil bull? Like, this was like, boom, this is the money. This is time to ring the register. I think it's time to ring the register. I'm not buying Exxon Mobil when it went up 12% in 3 days. I'm not coming in and buying it now.
This is a hard one now. I kind of agree with you on today. Just my thing would be in the longer term, is this just going to start spiking things back? And that's why I'm still concerned.
But stop, Mitch. I just want to interrupt you. You're calling for a recession. You've been calling it for a long time, and I think you're correct.
Yeah.
How do you get higher oil prices during a recession?
At the actual recession point, I agree. There's going to be some demand destruction.
We're in the recession. I think we're at the actual recession point.
That's where you have to, I think, ask the question. Do you feel that the recession is right now or it's coming? And some people think it's coming versus it is right now. I do feel today could be that pullback day for sure. I mean, 3-4 day rally like that, I would be in agreement with you, Dennis, too. As a day trader, yeah, that's sell the rip type of moment. So that's what you're going to have to be worrying about today. If you're a longer term trader on this type of move, how do you get around maybe a pullback that could come today in oil? I feel it could definitely pull back after this big rip.
I think, and I'm always buying dips and selling rips. This is just the way, I operate here. So So, maybe we get back down, maybe oil, falls, from here. ExxonMobil comes to a 50% retracement of the recent move. Maybe I get interested in it again from a trading perspective. I think everybody is correct here, though, to a certain extent. I think Joel's argument definitely holds water in the long run. And I think the recession argument holds some water here, too. And I think we're due for a pullback, to your point here, Mitch, as well. So I just, I see it on CNBC. I see everybody wants to be bullish oil. One, because 90% of traders out there are momentum traders. That's just the way that they've been built for the last 10 years. People are like waiting for breakouts. They're looking, they're momentum traders. They're on that side. 2022 has been the year of the contrarian, though. And we've got to understand, strategies cycle. This is how it works. This isn't just, me talking. This is 23 years of experience. What I do today will not be what I do 6 months from now. It's just going to be a different environment. So when you take a different environment, you got to do different things. If you are playing momentum breakout strategies in 2022, you're probably down on the year. And you might be down significantly. So you're long only, you're almost guaranteed to be down on the year, which is why I've argued for a long time where I think you got to be able to go both ways. I'm doing excellent this year from trading perspective. Long-term investments, which is long only, not doing that great. But, from a trading perspective, there's so many opportunities, but 2022 has been the year of the fade trade. That is selling rips and buying dips. We are repeating this on this show almost every day, if not 2 to 3 times a day. Why do we keep saying that? Because that is what is working. We talk about what is working. People who are coming in and buying oil stocks now, I think, are highly likely to lose money because they needed to be in them 6-7 days ago before they ripped higher. So that's where I'm at on oil. I think it's gone too far too fast. I think you need to pull back now.
The battle's going to be on. Let's go towards some ratings that are out there now. These are definitely moving stocks. We want to get you guys the stocks that are moving out there. First one we're going to go through is Pinterest. Goldman Sachs upgrading Pinterest here to buy from neutral. They're upgrading the shares of Pinterest on the back of improved user growth, engagement trends in the short and medium term, and the potential for upside for revenue growth trajectory with operating margins estimated as we move into 23 and 24. So Goldman positive on Pinterest. I don't know about that. But then again, I don't use Pinterest as much.
And I kind of had a bearish rant on it yesterday, so obviously not the time. Goldman Sachs comes in here.
I was with you. Don't worry, Dennis.
Goldman's going after you, Dennis.
My bearish, I know they really listen to me. They must hate me. And they come and upgrade the stock now. But I think my argument was people who were using the Twitter valuation value Pinterest doesn't make sense. With that being said, Elliott is in here. I've actually been bullish Pinterest, from back to 20 to 21 back in August when we had the pullback just because Elliott was in there. You get Goldman Sachs upgrading something now, it's a huge vote of confidence. So I think you got to buy pullbacks in Pinterest. So again, with trading, you've got to be able to identify when there's a catalyst that's going to make your thesis wrong. So, I thought 25 to 26 may be resistive. I didn't buy the argument that Twitter, and I still don't buy that argument. But Goldman Sachs can be a game changer. So if we get up over 26, Pinterest is on breakout mode.
There you go.
And then I think you got to be looking at pullbacks to buy.
There you go. I was looking at the chart here, and I'm not going to make any comments about Elliott and Goldman Sachs or anything of that nature. 26 has been a big level. And here you go. You can see on the dailies, the upper right chart, we knocked on the door back in September 15th. We hit 25.91. You're back at this area on good volume. It appears to be bid in the pre-market, so it looks like we're gonna got some work to do in the 26 handle. I'll just go out on the monthlies here, and your next monthly high is quite a bit higher, 27.95. So if you think this is a clear breakout, Goldman's got it going like they did with Wells Fargo. Whew, did they get that thing moving? Or look at that. They had the upgrade on Monday. So these analyst ratings can have legs for more than one day. So it looks like we're taking out 26. I don't think we'll hit 27.95 today. I would just be a little cautious if we rally up in the 26 handle and the market rolls over and we start nosedive and go back under 26, you may want to look at, lock in some short-term profits. But that's what I'm looking at in PINS, trading at the highs of the pre-market session.
But this stock has had fantastic relative strength too. So Goldman is upgrading one of the strongest stocks in this case. So this is why I really want to talk about we don't often talk about ratings because they haven't been moving stocks. This one's going to move. For the simple reason is that Elliott is still in there. The stock hasn't been going down with the overall market. It's been holding up. And now you get the Goldman upgrade. I think there's a path to 30 on this. And people are laughing, oh yeah, he's bearish oil and long and bullish Pinterest. I just, this is trading. So maybe you're on the opposite side of that. Maybe I'm going to be wrong. It's okay to be wrong. It's not okay to stay wrong. Yesterday, I was very wrong to say Pinterest. I thought, the people making that argument. Now Goldman upgrades, it's a game changer. Goldman can be a game changer. It wanted a vote of confidence. It got a huge vote of confidence. I think it pulls back to 25 today. I think I'm a buyer.
As a trader, I think, the setup's there for it to run. As an investor, I don't like Pinterest.
No. As an investor, I wouldn't touch it. Not in long-term portfolio.
As a trader, I understand it. It's a nice.
What was the news yesterday?
There was no news on. There was just the news on Twitter. But what I argued yesterday when you were away, Joel, was there was multiple people saying, well, if Twitter's worth $44 billion, Pinterest and Snapchat are worth a hell of a lot more than that. And I'm like, well, it's not really worth $44 billion. Just Musk got stuck buying it for that. So that's why I was like, I argued against that whole thesis. So, but you can't stick with that argument when Goldman Sachs comes and upgrades it because they move things. They may be wrong in the long run, and maybe Pinterest comes lower, but you got Elliott in there. Now you got Goldman behind it. And now you've got like two major votes of confidence here in this thing. And it's been sitting up near highs for a while, not selling off. The relative strength on Pinterest is fantastic. So we can look at it from valuation, David, and say it's 6 times sales. I'm not touching my long-term portfolio. But as a trade, fundamentals don't matter at all in the short term. They usually, unless the news hits you when you're in the trade. But in this case, they're just, it's oversold. I mean, Pinterest has been oversold for a long time. You look, it came from $85 down to 20. It already had its bear market. It was the same argument we were giving yesterday on the growth stocks. When I was saying, Sean was saying, some of these stocks have bottomed in May, June, and they did, and they haven't made new lows. I mean, I argued yesterday that, hey, maybe there's a case here to be long some of these growth names, over some of these value names that, even like an Apple, you can say, in the long run, I'd rather own Apple than Pinterest. But in the short run here, you can't argue with the relative strength, and you can trade anything. You don't have to worry about the price to sales as a trade. You don't have to worry. You can trade anything. So just don't confuse the trading with the investing, though.
And if you want to go on the monthly here, I mean, inverse head and shoulders here, right? You got the left shoulder here, building on a right shoulder, nowhere near a 50% retracement. And I think Dennis is making an excellent point that the factors have changed. It's had good relative strength. Elliott, we know Elliott's been pumping. What if Elliott comes in with another buy? The momentum has changed in it. So here we go. Never used it. Let's see hold in 26 today.
Let's go to the next one.
Yeah, I'm just going to say we just got to be respective to influence. And what that means is the influence of Goldman Sachs and Elliott is substantial. If Elliott wasn't in Pinterest, it wouldn't be anywhere near where it is. It would look more like Snapchat. But the Elliott activist stake has held this stock up very well. And Snapchat did not make new lows either. So, that becomes interesting as well. And we'll go to the take two here in a second, Mitch. I just wanted to talk because Snapchat obviously gets traded with Pinterest. I love my relationships. Look at Joel. Look at the Snapchat. Look where it bottomed 2 to 3 days ago. 934, the low back in July. 942, and then reverses out of here. I mean, on a pullback here, I could argue for a trade for Snapchat.
It's sleepy down here. It's
the Sean Udall pick.
Okay. Not long run, not like investing in it because I think eventually, these are all getting TikToked. But if you can avoid the news, I wouldn't take it through an earnings report. But obviously, if an earnings warning hits you, that sucks too. But I think on a pullback here, I think there's buyers in this stuff right now.
They've been patient at 950. I mean, look at the last 4 monthly. Well, we just started October. 934, 950, 981. Not quite at the COVID low. I mean, these are the kind of formations you see where they're just saying, they're not buying. Maybe they're not buying it at 1120 or 1150 yet, but they were like, "Hey, give me everything I can get under $10. I want to build a big stake on this." What you got to, figure out next is it has a leap up. Are they
Yeah.
gonna have the same appetite? Okay, well, now we got to get it at 10.50. We got to get it at 11. We're not chasing it and build a formation. But the one thing about the pins yesterday, and I just looked at it. I mean, it had a nice gap fill yesterday too. After the update, came down and topped hit the top of Monday's range, so gave you an opportunity there. I don't know if Snap's going to give you the same kind of opportunity. Dennis, we got a little rally going on there. I know, not a big rally.
There's a turn here, Joel, and we have to respect that. There has been a turn in the last few days where the dips are getting bought tremendously, and we have to respect that. We talked about the possibility of HELE, Helen of Troy. I said the possibility of it yesterday. I'm like, they're looking for dips to buy. They might buy this dip. It was a terrible earnings report, and look what they did. Christian, same thing. Open at the lows, they ripped it to higher. They lowered guidance, this company. So you're starting to see a positive response. This is what, I said about the silver lining market. You'll need to see this to start getting bullish. So, I mean, you see moves like that where it started with Micron. Micron earnings weren't any good, and then that turned around and went positive. This Helen of Troy is sleepy, and not saying I'm going to trade this thing, but it's an indicator that, hey, money managers are looking to buy stocks right now. So this thing pulls back 10% off the open. They came in two hands buying it, and I think you got to respect that. And do I still think, we're in for some tough times ahead? Absolutely. But in this short term right now, they're buying dips. And I've got to respect that, and I'm buying dips too.
We'll see if we can get back towards that 50% retracement level that we've been pointing out around the 384, 385. There's still room for that. Let's go towards the next rating from Goldman Sachs, which came in for Take-Two, an upgrade for Take-Two to buy and raising the price target to 165.
You know what really sucks is that I had this on my buy list. I sold this at 127 back, in September when I thought everything was going to roll over. And I had this on my buy list, and I was looking at it a couple of days ago, like 110 to 112, and I was like, I'm going to try to get this at like 110. I didn't get filled that day. I was like going to buy it in the long-term portfolio because I've had Take-Two a lot of times and had some luck with it. And now it gets the upgrade. I'm like, come on. So now it's 120. Now it's 10% up, so now I missed it. So I think Take-Two has room to 130. I would be a buyer of pullbacks here on Take-Two. I do think Take-Two is going to be a huge player in the metaverse eventually. The gaming stocks have been beaten up very substantially. I feel like they've already had their bear market. Even if we go back to Take-Two, look when it bottomed. It bottomed back in May when everything else bottomed at 101. So I feel like a lot of these stocks have already had their bear markets, and I'd be a buyer of Take-Two too. So I actually am on the same side as Goldman. I just wish they wouldn't have upgraded until I bought the damn thing. So I'm disappointed that I didn't get long it.
It's wide open on the dailies here. I'll just give you the pre-market high if you wanted just a real short-term target. I would even use it 121.48. Beyond that, I would just go to my dailies here, and if they're going to get this moving, the file through today, 122.47. That was your high back on September 21st, but it came really quickly down through this area. So there's a chance you could, I don't know if you're going to rip right back to 125. If you're more inclined to buy the dip, maybe not today, over the next couple days, you got a pair of highs at 117.50. That would fill the gap. Maybe that old resistance will act as new support and a lower risk entry on the long side.
With Take-Two, my biggest concern would be how does the retail season for kind of December, Santa Claus, how will that be for gaming? Will the gaming numbers go down with the demand and the inflation?
I'm scared to death of this earnings season. I'm going to clarify once again here because everybody's confusing investing with trading in the chat.
It happens.
I want to be very, very clear here. I'm bullish right now before we get to this earnings season because I think this earnings season is going to be a disaster. So I think there's opportunities here. The banks report next week and say, "Oh, the earnings season's starting right away." The banks are reporting, next week. You got 5-6 days. You're not getting into the big guns here yet. So I think there's an opportunity. I'm not holding anything through earnings because earnings is a wild card here. But what I say is you've got to respect what I am seeing in the trading action. My job as a trader is to watch the tape and try to make calls from what I am seeing. What I am seeing in the last 3 days is vicious dip buying. That's what I'm seeing, and I have to respect that. I'd love to be bearish. I'd love to go on the whole recession thing, and say, yeah, I'm selling this rip right now. But I'm not getting paid to do that, because right now, that Helen of Troy thing is telling me these money managers are scared that the bottom is in, and they're buying it. And that has the momentum to push us to 385 or 390 before we even get to earnings season. So I think the earnings season could eventually derail this rally. But again, to Spinner's point, to Christian Fromhertz's point, if you have a response to crappy earnings like Helen of Troy, this earnings season might not even derail it. It could be the silver lining earnings season. We kind of saw this last,
but that was
season.
last season, though.
And it could do it again.
Yeah, it. And if they do, then we've reached a major long-term bottom, and it's the lows that we saw at 3,500, 3,600 are going to be just like the COVID lows.
I'll tell you how bullish I am in the short term. I'll tell you how bullish I am in the short term, and the jaw drop. You know what I put on for a swing trade long yesterday?
What you put on, Dennis?
ARC.
Ooh, you're a brave soul, Dennis. You're a brave soul.
It's got a short leash. It could get derailed.
that Tesla sale, that Tesla buy, you were okay with that Tesla buy?
No, and that's the one thing I was looking, but it's a rental here, and I do think that money managers are coming in. I don't mind the response to Tesla so far. That's the wild card with the ARC buy. I was like, the only thing is if Musk has to sell more stock, that Tesla's going to go down more. So I'm a little bit nervous on it from that perspective. But short-term rental here on ARC, there's always Dougie Cass associated short-term rentals. Short-term rental on the long side, not the long-term portfolio, just short-term. I've got it earmarked swing trade. But we were pulling back. We tried to break out 2 days ago. We pulled back. I was able to pick it up at 39.05, I think, yesterday. So I quickly got up $1. It went straight up after I bought it. Holding on to it here still. We're pulling back here this morning. But if sentiment is turning towards this market for at least a week, even for a few days, it may get derailed. Something might happen, big earnings warning, and then you're going to have to get out of everything. But right now, calm before the storm maybe. There still feels like there's room to 385 to 390 here on SPY. And if that goes that way, ARC's going to benefit the most.
All right, let's keep going. Let's go towards, I think let's just, instead of going into earnings, let's touch what happened in Twitter, since we already been talking about that. Let's get it off the headlines here. And so the Twitter saga continuing.
Just before you go, Mitch, do we have an 830 number here?
No, nothing 830 here. That's
jobs
gonna be
tomorrow, right?
Jobs tomorrow.
Tomorrow. Do we have jobless claims though?
It shouldn't hit here. I'm just going to double check here.
Somebody just in the chat said jobless claims, so I just want to make sure that there's
initial are going to be hitting here. It looks at 830.
The big number comes tomorrow with the
tomorrow.
jobs.
Yeah, the one that everybody
jobless claims is today. Is that at 8:30? Yeah, the chat.
Yeah, 8:30.
So 203,000 I just wanted to know that because we're coming a minute before, and I don't want to get.
I'm focusing on that September jobs number tomorrow. That's where the Fed will focus on, but we can definitely take a look at initial jobless claims here. I mean, if you looked at the JOLTS data that we got, the ADP data that we got, it was still showing kind of very similar markets in the labor. I mean, we're getting a little bit better where, more jobs are getting filled, but I mean, the jobs need to get filled. And then the unemployment needs to go up. It's going to take a little while. So 203,000 is the estimate. We'll see what happens here in just about a minute.
Okay.
All right. So I'll leave the Twitter. Yeah. If I start talking about it, it's going to hit the tape. We're going to have to interrupt it. So let's just watch it hit the tape here. The biggest thing I think to keep watch also is, I mean, at the end of the day, until we see inflation really turning around, and if we see oil starting to peak back up, coal has been really ripping lately. I don't know if you've seen the coal stocks, but they're still ripping. BTU, another day ripping out yesterday, and it just seems like inflationary pressures are coming back. Seems like it.
All the commodity stocks have really been ripping. We are chopping around on this jobs number here. All the commodity stocks have really been ripping here. So they all move together. And again, stocks have all been kind of
all right. Here we got it.
Talked about that.
Coming in here at 219,000 versus 203,000 estimate. So that's good news at least. You're getting higher initial jobless claims to come on in. It's not a bad move there. 219,000 versus 203,000 estimate. The big number is going to be tomorrow's September jobs report, right? And so keep your eyes on that. We'll definitely have that tomorrow for you, and that's going to be, I think, the one to watch.
They've bought this dip again, Joel.
Of course.
This is what is happening. It's not, of course. It's just new to the last 4 days. So it's new. They have been buying these dips viciously in the last 3 or 4 days. You can see it in the tape. HELE again, I'm going to give that example. But overnight here, we get hit. We're down, 30 handles on the S&P here overnight, Joel. They bought it right back up here again. Actually, we were down more than that overnight. How far did we get down here?
We got the S&Ps were down 30 handles at one point.
Yeah.
But that was I don't think the spider was open when it did that, but we rallied quite a bit there. They were. The spiders were open, so I can go to the SPY chart to illustrate that for you guys. And it got nowhere near, because I was looking 37.34. I looked at that. Did we have some bad intraday news or something? Because we went down quite a bit in the S&P yesterday. I didn't think we got that. 37.34 seemed pretty low to me, but let's get the pre-market action here in the spider SPY, and that might have been a bad print there, but you're climbing. You made that low just after 6 a.m.
We're climbing, and we're trying to go positive here. So again, what you're seeing is, and again, we just have to read what we're seeing. Dips are getting bought.
And so, you know what jumped out?
There may be something that derails that, but right now, this tape has turned, and
you know what jumped out? You
got to be respective of that.
Look at this in the S&Ps too. You had like the current high right now is 1950, 1950. Yesterday's high was right there at 38.20. That's only 15 handles away. You take that out, boom. You only got one stopping point between that and 3,900. That's 38.33. But look at that. You had the move up, the surprise move up on Monday, follow through on Tuesday, digestion day on Wednesday, and now you're pressing up. Not much of a consolidation, but we take out that 38.20, and there's considerable room to the upside today. We're only 24 handles away.
It's been impressive.
The hourly has been holding up really well. At least from what I can see on the SPY, it's pure bullish trend. And I think until that changes, you're playing the bear market rally. These are dead cat bounces. It's going to continue going until we get some bad news, right? We need some bad news to come in.
But again,
tomorrow.
But stop. And again, you can feel a turn in my sentiment here too in the last couple of days. But again, that Helen of Troy is a big tell for me. All I do is I use tells, and I'm like, holy mackerel! If they start buying stocks on lowered guidance, these bears got problems, because there's going to be some lowered guidance, but you lose the whole bear thesis if that happens. So I've just got to be respective. It's still guilty until proven innocent, this market. But as a bear, and I've been on the bear train here for a bit, I got to be respective that, hey, something's changed here in the last couple of days.
I don't understand, though, Dennis. See, you're saying the Helen of Troy earnings is changing your earnings outlook, but you're worried about the earnings season coming.
The response to the Helen of Troy earnings scares me as a bear.
Okay.
That response to the Micron earnings scares me as a bear.
Mm-hmm.
Nike, the dip was bought here too. It took a few days, but they're trying to close that gap here, Joel. So I just think you've got to be cautious being rah short this market. We're going right back down. It feels different. I trade all on field. Rob Friesen used to always joke. He's like, you're like the only trader on Bright. Everybody's quantitative, and you're sitting there trading on field. I've traded on field for years. I just feel it's a little bit different right now. There's going to be some earnings warnings. I'm scared of the earnings season. There's going to be some hits on the earnings. But if the response, to Spinner's point, Christian Fromhertz's point, to my point, if that response comes to a silver lining and they start buying stocks on lower guidance, the bears got problems.
All right. Well,
quantitative feel, Dennis. You have a quantitative feel for the market.
Well, I trade quantitatively, but I have, I don't know what the field's sometimes wrong.
I
it's
mean,
not always going to be right.
intuition after
Well, that's
trading
what
for
it
that as many
is.
years. I mean, there's a reason why we listen to you,
What it
Dennis.
is. It's just
It's experience. Intuition you do develop
feels
after
different right now. So
experience
as
in
a
the
bear,
market.
I'm a little bit, I just don't want to be caught here and all of a sudden the S&Ps are at 4,000 and I'm like, what happens? So I'm just playing out different scenarios. I didn't move my long-term portfolio to all in, but I'm leaning long on the trading side right now. And it's been a while since I've done that.
All right,
All right, let's
go
bring in
ahead.
Christian Fromhertz from Tribeca Trading Group, and he's going to come in. And he's going to slap us all aside the head, and he's going to tell us what's going on.
Well, I'll
Right,
tell you one thing.
Christian?
Christian always knows where the relative strength is. So,
Christian, are your ears ringing? I must have mentioned
I
you
know,
10
I know.
times during this show before.
Good morning, guys. Well, I think it's a very complicated market right now. So I think that you guys are covering the points that if you start to really kind of think about what's going on now, you kind of have to take that good with the bad and, think about how you're going to position in this market where, yes, you've got earnings that are going to be coming out. And we saw a couple just, horrible reactions. We saw the FedEx, we saw the Nike, right, which was absolutely horrible. And I'm with you. I think that there could be a couple more of those things out there because let's face it, we know that that there's been a stronger dollar, and that's a major headwind for some of these, companies like, the name that comes to mind for me is Microsoft, because they came out and it was a couple months ago, I think, at this point, and they said, hey, we're going to have to take some type of a drawdown because of the stronger dollar. And what has the dollar done since then? It has marched higher. So I think that you're absolutely correct with, you're going to find probably a couple companies out there that are going to still, even before they report, come out and say, hey, we're going to have to bring down our guidance a little bit. But then on the flip side, it's the question of, well, how much bad news is already priced into this market? And, we saw last week, we saw Micron, which was just had horrible guidance. I was like, am I understanding this properly, just to make sure? Because I didn't see anything that was particularly good
Yeah.
or positive in the Micron report, but yet they went up. And as we know as traders, that when you've got bad news and the stock doesn't go down anymore, it's actually a pretty bullish signal. And we
Mhm.
actually saw like call buying in Western Digital, which is, those two stocks go hand in hand, the Micron and the Western Digital, and that name got a pop too. So yeah, I mean, it's one of those situations where, I don't think that you want to be fully in this market. But at the same time, you don't want to be fully bearish either. And I also go back to, hey, I just really wanted to get out of the month of September because it is a very weak seasonal month. And it does feel like, and I don't think it's going to be all rainbows and butterflies in October, but you are now in a much better seasonal month when, in terms of a midterm election year. So it's, it's time to put on maybe the little bit more of the optimistic hat than the pessimistic hat right now. But
Well, a great point. I mean, we've had the pessimistic hat on here for a long time. It's been a pessimistic year, and it scares me. Like to your tweet yesterday with the Helen Troy, I mentioned this multiple times before you came on. I mean, that's if you're a bear, that's a scary response because there was nothing good in that earnings
exactly.
report. It was a disaster.
Yeah, they
and
said
they
a little
turned
bit
around
about
and they bought that thing to green. I'm like, wow, that's a scary scenario for bears. And I mean, Helen of Troy isn't the market. And a lot of people don't even know the stock. But it's just showing you that money managers here are hungry for dips. And they don't even care that this company lowered guidance. They just wanted to buy the dip.
Right. And to your point that you just made a few minutes ago too, is that, hey, yesterday was kind of interesting because you go back to what we experienced in September. We open up lower and we keep going lower. And yesterday was a little bit different where things looked pretty ugly in the first, hour and a half. And, then the dip was bought. And we haven't really seen that in, yeah, I mean, definitely all of September. There was no buy the dip. When we were down, we just kept on going. So it does feel like a little bit of, change in sentiment. We'll see if that carries through. But I think you still want to have that cautious hat, so maybe not the pessimistic hat on, but the cautious hat. should still be on, as we still have the Fed and about like 50 speakers that are on today, and speaking twice too, some of them. So they're trying to really nail down a message that they're not pivoting, and whether again the market believes them, but they're still at it in terms of, hey, I'm going to speak 2 times a day, 3 times a week, and give you the same message over and over. I don't know why they just don't play a record and just play the same record over and over and over about they're not pivoting and they've got to get inflation down. I think at this point we could all just recite what they're going to say in these speeches.
Well, Christian, isn't our Fed chair just a robot? A bot from Twitter?
Yeah,
Nah, I'm just playing here. No, but definitely one thing that I would say about that, though, is we did get a September rally, right? How is this any different than that September rally from the 7th of September to the 12th, where we went up 5.34%?
Yeah, I mean, and that's the thing that you want to keep your eye on too. You want to keep your eye on the ball, because you forget about that in the beginning of the month, and it does seem like these beginning of the months are a bit stronger than the second half of the month. So we're still right now in that beginning of the month phase, and yeah, I mean, we did, that was the lone rally that we had, and it's kind of been forgotten about. But you bring up a good point. We did rally for 3 or 4 days. You just have to be aware, when the music stops playing. So and I could share my screen and we can talk about some technicals to kind of keep an eye on, because I think the more that you can kind of keep an eye on some levels, and I know you guys quote levels. I know Joel does that a lot in the beginning of your session, but it's really good to say, okay, well, if we lose this level, what am I going to do? And to be able to have a plan, to kind of just flip the switch and be like, okay, I'm more bullish at this level. If we break that level, something else is happening, and I've got to, kind of rearrange a little bit.
All right, let's go ahead.
We're
You
on the
can bring
line
those.
with Christian Fromhertz here from Tribeca Trade Group, and I have to agree with you. The way that it's been is like there's been pockets in the market, and once it clears that one pocket, it's a lot of vacuums in there until you catch a turn. I want to ask you. We got bank earnings coming up, and
Yeah,
been very boring. The XLF, Bank America, all these stocks now. Dennis has, certain strategies where he likes to see pre-earnings runs. I mean, what do you think? You got to, I don't know if you want to look at like the XLF, or you want to drill down on something like Bank of America or JP Morgan, who starts things out.
sure.
But anything that is standing out to you in the financials or banking sector?
Well, I'm going to go with your original assessment and say boring. For the major banks that report, the J.P. Morgan, the the Bank of America. What I try to what I try to do with the bank earnings is listen to the conference calls, and I like to
Really?
hear what they say about the economy. Right. So one of the things that I heard from um, Bank of America the other day, and it wasn't their earnings. It was just, I guess, they had a conference, and they were talking about how there's a bull market in financial advice. So I was like, hey, that's interesting. And then so outside of the major banks, which again I think they're just too difficult. If I bring up a chart and if it doesn't jump off the page to me in the first 5 seconds that I look at it, then I just move on, because there's so many other stocks out there. But I will say what's particularly interesting, not with a JP Morgan or a BAC. These stocks are in downtrends. They're not really showing any life other than a little bit of a bounce like everything else the last couple of days. What I think is particularly interesting is what's going on in some of these more like broker dealers. They're not banks. But something like an LPLA, this is LPL Financial, broke out to a new high yesterday. So there is some pockets of strength. I thought this was very impressive.
Wow.
Nice move on volume. And if you think about it, like again, I don't really like to chase that type of a candle, but it's basically been going sideways where the rest of the market was going down. in September. So I like that relative strength. And if you look at a couple of the other names, another name, I actually got long this name yesterday. It's not as I'm kind of kicking myself a little bit because I feel like I should have just bought the LPLA and just would have went with the strength. But I kind of like Schwab back at the 200-day moving average. It's got your support there at the 200-day moving average. And then there's another one too that I thought about, which I haven't looked at in probably six months to a year, which is this little company called PayPal. Now, again, like PayPal, I'm a trend trader and I don't like names in downtrends, but I'm just kind of putting it on the radar because you look at some of these, places where you can park money. And I had a look yesterday because I'm like, hey, what is PayPal giving you for your money? Some of these banks or places where you could put your money in right now, they should be giving you some interest given the move up in the short-term interest rate.
Mm-hmm.
So PayPal, any guesses on how much PayPal is giving you now for your money?
2%.
Yeah, good. I think it's 2.25 is what I said. And again, they can change that. But yeah, I mean, it's spot on. I mean, I don't think Chase is still giving anything for your money.
No, and I mentioned that to Dennis the other day, and yeah, they are. They're being very, very stubborn. Just backtrack real quick. You said Bank of America said a bull market in financial advice.
Yes,
is that
I believe that's what I heard.
The terms, huh? So that's bullish for pre-market prep.
Yeah.
Well, we don't give financial advice.
But yeah. We don't give financial, but no, just, kidding. But yeah, I mean, I think that makes sense when I had so many questions last week and I put out like a whole video on like, hey, how do you actually invest in bonds now that they're yielding something? The 2-year got to over 4%. Last week, so you don't even have to go out to the 10-year, right? You could just do the 2-year bond, and you could purchase them through Treasury Direct. But people, including myself, you forgot because there was no reason to go into Treasuries over the last 5 years because they weren't giving you anything. But now they're yielding something, and you begin to say, hey, wait a minute, how do I purchase bonds again? Because hey, you got to go where there's the risk to reward. And last I checked, there's no risk, in government bonds. So that's interesting. And I thought it resonated with me to hear that because yeah, people are going to have to do some shifting in their portfolios. You can't just be, all stocks. You can now look at, even though bonds are still in a downtrend. But if you've got that, if you don't care about, the rates fluctuating and you just want to own a bond for a couple of years, you now have the ability to do that and get some yield risk-free.
All right. Now, of course, one of the areas that I've been watching is kind of the coal stocks and kind of commodities starting to come up. Is there any there standing out to you, Christian?
Yeah, I mean that's a great point too because you go back to energy and I loved what you guys had to say about it because it has been on a decent run over the last week and XLE is at a pivotal point, right? It has had this nice run from 70 to 80 and is it the time to take some profits here? Probably. I mean I think that as well. But the other point is, the energy trade has worked the best for this year. So, it's kind of sticking with some strength. I'm still worried about crude because crude is technically in a downtrend. It's same thing as the energy stocks. It's kicked up from the lows, but it's still, it's testing the 50-day moving average. So by definition, if it doesn't get over that 50-day moving average and it's still below the 200, you still have to kind of think about, hey, maybe something is changing because crude has been kind of slipping here. And if this doesn't get over the 50, then that's another lower high that we're experiencing. So you can't, I don't think that you could be complacent in this group. I do like what's going on in the coal stocks, though. You're definitely looking at where the strength is in this group. Your BTU, which continues to see a little bit of call buying here and there. Your AMR is very good, and I actually was just looking at a new one, which is ARLP. And I think maybe this trade could be over once they bring back the coal ETF, because once they decommission the coal ETF, these stocks have been absolutely on fire and there's no ETF for them. but you could kind of go through. ARLP is something that's now, again, you could use the 50-day moving average as your stop. It's not extended, so I like this one. And then my favorite in the group is the I leave to last, which is the CEIX. I think that can run to 73. You can see the red line on my chart. So again, that's good for a couple dollar move, right? And that's right now how we're kind of trading this market, is more of the singles and doubles. Harder to get a home run, harder to really, to really kind of think about things in terms of, making huge, moves to the upside. I think looking for a couple dollars here and there in some short-term swing trades works pretty well. So yes, I like the coal group still.
All right. Now, what's another area that you're seeing some relative strength that investors might be missing?
Well, then it really gets tough, because we're just not seeing that many sectors get above their 50-day moving average yet. I mean, it's basically just energy that has retaken the 50-day moving average. There are some areas, so I kind of look for both, areas above the 20 and the 50-day moving average, which we don't have yet. So it's a little bit of this and a little bit of that. I kind of like what's going on with some of the international names, for example. So again, I try to bring some different names that maybe are not as common as people are looking at. But if you look at something like a CPNG, right? So this is a South Korean. They're more of an online like marketplace type company, right? So they're back above their 200-day moving average, and it is still a new company. So it's really the first time that the stock is over its 200-day moving average. So I like also simple trades. So for instance, I got long some of this yesterday, and my stop is the 200-day moving average. So I know exactly if this is a false move, like we saw back in August, then I'll back out of it at the 200-day moving average. But let's see if it wants to do something. There's a little bit of volume in there too. Another one too that has gone down pretty decently, right? This is a software company, I believe, out of Brazil. Is it Brazil? Which is STNE. It's the first time this is above the 200-day moving average since, I think this is June or July of not this year, but last year. So again, kind of, when you're looking at, like stage analysis too, this looks like stage one, sideways, and maybe it's starting stage two. So again, a little bit something off the beaten path, but I know exactly where, if I were to take a trade, which I'm not long this one yet, but I would use the same thing, the 200-day moving average. Keep it simple, right? Maybe this thing is going to start to do something. We've seen, I've gotten countless questions, and I'm sure that you guys do, of names that are still going down, right, and haven't fully bottomed yet. I like to see that first move out of the sideways. So this is normally what happens when a name has been in a big decline. Sideways for like 6 months to a year, everybody forgets about the name, and then it starts to kind of get back into that retracement mode, which is like your level 2 analysis. So there's a couple names that I'm looking at.
I'll just do one. Oh, go ahead,
Sorry,
Dennis.
I was just going to say, Christian, it's so interesting, and I know I'm just sitting here listening in the background, but the names you're pointing out are the same names, somewhat that Sean Udall was talking about yesterday, but the same names I'm talking about too. It's like these beaten down, low earnings or no earnings names are the ones that actually are perking up here right now, which is so interesting. I mean, it's been a market where they've punished these stocks so much that it's like it's almost seller exhaustion on a lot of these issues. Like the STNE, some of these things have just been beat up so much that, is this just, the time where it's kind of is all the bad news is priced in on some of these stocks?
Yeah, I mean,
everyone's out. Everyone's out.
Yeah, I mean, and I think, it's important to get that confirmation, right? In regards to, how many times have you guys gotten questions about, this software name or that software name that's still going down, right? So I still don't want any part of the names that haven't kind of confirmed that their bottom is in. And again, we don't know that the bottom is in some of these names. You have to have a stop. You have to think about it in terms of plan your trade out, have a stop price, because, they could. There's no 100% probability that says that the low is in this name. So it's an $11 stock, but that doesn't mean it's cheap. It just means that, hey, maybe it's starting to do something different. Maybe it has bottomed. Let's think about a trade here, and let's have your stop price where I know that I'm wrong. Always, I use the technicals to say, hey, this looks good to me, but I want to know where my out is in case my idea is wrong.
Right.
Christian Fromhertz, he's the CEO of Tribeca Trade Group, joining us here on Benzinga's pre-market prep with some great insight into the markets. Thanks, Christian, and we seem to be speaking to you all the time. I guess you did not take the bike today. Did you walk or
no bike today? No, I just went in as normal today because it's been raining, and I don't like to. It's the last couple of days. It's actually dried out today, so. I just made
tomorrow.
a split. Yeah, I woke up a little late today. So if you want to be honest.
Thanks, Christian.
Have a good
Thanks,
one,
guys. I appreciate it. A pleasure as always.
Christian.
All right.
I will say that pop that we got there in the S&Ps went to unchanged, and then we stalled out a little bit. So that's what the bulls need to do is conquer that 37.94 this morning. And as I mentioned in the S&Ps, and I'm sure you're going to get the same thing in this, while the spider hasn't traded up to that level yet, I believe. But we get through that high from Wednesday, and as I said, things open up on the upside.
We did get a $50 super sticker from Sharif. So if you have a question,
nice.
Go ahead and let us know. Definitely, we'll try to do our best to answer.
Lunch?
That tip. For sure.
Yeah, definitely a tip. You can let us know. Also, I did see some questions asking about Christian's indicators. I threw up his Twitter there in the chat. You guys can go ahead and give him a follow. Give him an ask. I'm sure he'll go ahead and let you know exactly what he uses.
I mean, Christian's just impressive too. I mean, his thought process, his risk management. Obviously he posts, his gains, losses every month. He's done it for years. He's been a very consistent trader. So, I've always respected Christian.
100%. He's one of my favorite follows, and probably about very few videos that I watch daily on recaps. One would be Christian. All right, let's go towards the earning stocks that are out there. Constellation Brands coming in with an EPS of $3.17, beating the $2.81 estimate. Sales at 2.65. Beating the 2.51 billion estimate. They lowered their guidance on EPS. It was set at $11.20 to $11.60 on the high end, and versus the estimate that was $11.05. So it looks like it's actually a raise. Actually, it's not lowered.
It's just not the stock. I mean, they don't have the growth. The P's not that cheap. I mean, it's these stocks that are competing directly with higher cash yields. So,
They've held up though, at least.
Well, these are going to hold up. They're defensive. They're going to hold up to a certain extent, but I just get scared eventually, like a cash substitute. I just don't see this thing blasting off. It's a lower beta stock. It's not going to move around a lot. But there's the case where this could eventually be down to 210. So I it's not the stock.
Just been hanging out near the monthly lows for quite a while. You've had some pops. Can't really get anything from the pre-market trading. If you're looking at this on the downside, you want a good monthly low. August low, or excuse me, September low, 228.63. If you're looking for a little, that's $5 away. I don't know if we'll get that low today off the report.
All right, going to McCormick now. They came in with their earnings EPS at 69 cents, missing the 94-cent estimate. Sales at 1.6 billion, missing the 1.78 billion estimate. They did reaffirm their full year 22 guidance.
Seller exhaustion here. It's way oversold. It got hit on the last earnings report. We're down from $107 down to 70, and it's typically a lower beta stock too. It's just been a huge move down for MKC. So I think a little bit of a seller exhaustion here. I think if the stock chart was different and had been, up near highs going into this report, they'd hammer it on it. But, the report is disappointing, but I don't think anybody expected anything else. So that's why it's not getting absolutely crushed. The algos hit it down to 71 on the initial number here, but quickly bought back up. It's just kind of hanging out. Though, this isn't, they warned, but it's holding up fairly well.
Yeah, this was the warning. This was the warning day. And I remember talking about it that day. So they took that to heart, a little reprieve, and then moving back up. If you're looking for some first things first, you got to take out the high from yesterday at 73.97. Your 2-day high is above that 74.54. If you right unchanged, I don't know, is it bid or offer there, Dennis? I see it unchanged.
It's offered unch. So
Okay.
but just be careful. This thing goes green. It could be one of those that, okay, well, the bad news is out here and you get a Helen of Troy situation. So I'd be cautious shorting on this bad news.
All right, now we did get some recession concerns that are coming out there. I'm going to really quickly go towards Ford as they're raising their price here on the F-150 Lightning pickup by $5,000. If you look at the starting price back in May 2021, this was at $39,974. Now the 2023 Lightning Pro model will be at $51,974, up nearly 11%. And a 30% increase from that original May pricing.
Average person's just not going to be able to buy these cars.
You're not going to be able to buy it. Let's just be honest.
Average person's just not going to be able to buy new cars. They're going to get strapped. I mean, this is why that's why I sold my Ford and I sold my GM. I owned them last year on the EV story. It all changed when they started jacking rates like this. I mean, that average car payment has just went up enormously here. So there's a reason these stocks have been beat up. They've had a relief rally in the last couple of days, but these are not the stocks that I want because, again, like as much as I see, some of these other names turning, and I have to respect that from a trading perspective, Ford and GM are just so, recession prone here that it's like, this is like the hardest stocks to make money in during a recession. So some of these growth names that are really beat up, may bounce back, and may actually hold up better. I just can't bring myself to buy Ford or GM right now because I think there's so many people that aren't going to be able to afford these cars.
Trying to fill the gap up to 1275 that you had. I believe that's when they gave that mixed warning. So it's hanging up here. It had the big, I believe that was on deliveries, the big up day. So it's hanging out. I'd be a little concerned if they don't get up and fill that gap and you get a weak market. But it's hanging in there for now. So, all right, great to be back in the 9:02 here. I got a hop. Great to be back in the saddle with you guys and Triple D. I'll check in with you later on today. Everyone have a great session.
All right, Joel's getting on out of here. Dennis, we'll see what happens, and maybe we can talk about it now that Joel's gone. What do you think about Peloton? Do you think this is really concerned for bankruptcy? Peloton giving out news that this came straight from the CEO, that it has 6 months to show it can survive as a standalone company from CEO Barry McCarthy. According to a report by Wall Street Journal, they did, though, plan to cut 500 jobs, about 12% of its workforce.
I think Peloton eventually might file for bankruptcy. I mean, it's just hard now. It's down from 180 to 8. I mean, we know when stocks file for bankruptcy, they're a buck or two. If it doesn't go bankrupt, if they find a buyer, if they have a miraculous recovery here, the risk reward might not set up here. I mean, it's just $8 here now. It's hard. It's been the short the whole time, but I mean, it could go 8 to 2 if it goes bankrupt, maybe. But I'm not betting on that imminently here. So I think just the easy money's already been made on the short side here.
Hey, at least you've been right so far. It definitely had that ugly turnaround. I mean, what was the high in Peloton? Man, 171.09.
None of it made sense.
Holy moly!
None of it made sense. It never made sense.
It was a monster.
It's above valuation. At a certain point in time, it's like everybody's not going to buy one of these bikes. And they had a cool business model. It worked really well during the pandemic when everybody's staying home. They were buying Pelotons and they're all backed up. But that time has passed. So I do think the company could eventually go bankrupt, but I'm not going to call the path to get there. Could have some short squeezes before then. It's not going to be an easy ride from 8 to like 1 or 2. And again, people think bankrupt equals 0. It typically doesn't. It's usually 1 or 2. So the ride from 8 to 1 or 2, pun fully intended, might be a rough one.
All right, I'll let you go ahead and get on out of here. You have a great day, Dennis. Take care, and we'll see you again tomorrow. Keep battling it out there like always. Last thing I want to leave off with is, of course, I've been talking about what's been going on in our live trading stream. Yesterday, the stock of the day for me was MRO. We got in at a nice little push after, of course, the 1030 number came out. We started pushing into this OPEC coming out, and it was a nice day for MRO there. So we'll see what happens today. Will oil continue kind of pushing on up? Will we kind of trade some different stocks? Will we get into some coal plays? Or maybe we finally start seeing the utilities start turning around. Those have been really hitting hard. If you look at the daily chart, this is just falling off the tape. Will they bounce back today? Come find out on live trading. We got Lord Ryan, of course. I will be there, and we'll see what happens in the trading action. Like always, hit the like if you guys appreciated pre-market preps today. Of course, we had Christian Fromhertz, so if you missed that, definitely check out the founder and CEO of Tribeca Trading Group. Always a pleasure to have him on, and we went over a lot of the topics today. We couldn't touch it all, so if you guys want to definitely catch up with us, stay tuned with live trading. I'll make sure to get on over with the Costco news that I left out. And we also got some other analyst ratings on out there. Wells Fargo coming out with one on Silvergate. Goldman, one on Steel Dynamics. We got a lot to talk about on live trading, so come on over and we'll continue the action in the live trading stream. We'll see you next time right here on Pre-Market Prep.